Happy Monday, folks. Welcome to Inside India. I'm Amitoj Singh, and these are your headlines. India logs its fastest pace of growth in 1.5 years, with its economy expanding 8.2% in the September quarter. But that blockbuster print is now clouding the case for lower rates as the RBI meets this week. New Delhi sounding optimistic about a trade deal with the US by the end of the year, with India's Trade Secretary saying most of the issues have been settled. Also, the Indian markets will be looking to build on gains in the fresh trading month after a 3-month winning streak. All right, let's take a quick look at the Asian markets. Talk about a red line. You're seeing one at the top and a green line at the bottom. We'll talk more about that in just a bit, but that gives you a sense of what's going on. The markets opened, December mostly in the red, some in the green, as data came in revealing China's factory activity unexpectedly contracted in November, according to a private survey released on Monday. Now, traders are pricing in an 87.4% rate cut for the upcoming Fed meeting on December 10th, according to the CME Fed Watch tool. At the moment, you're seeing a Nikkei 225 really down, minus 1.68%. And of course, the Kospi also down in Australia and New Zealand. The markets are down too, but you're seeing some positivity in the Hang Seng and in Shanghai. The Nikkei really leading in terms of being down. That's where the market's focus is going to be. All right. U.S. futures, how did they shape up? They are back online after an 11-hour-long disruption at the CME Group on Friday, one of the longest outages in years, which halted futures trading across equities, bonds, currencies, and commodities. CME blamed the outage to a cooling failure at the Saracen data centers. Trading volume was also thin over the Thanksgiving holiday weekend. Investors will be hoping for that Santa rally after a roller coaster November for stocks. The Dow and S&P eking out modest gains for their 7th straight monthly gain, but the tech-heavy Nasdaq snapped its 7-month winning streak. Now, the Indian markets, they're coming online in about 45 minutes. Here's what GIFT Nifty futures are indicating. A bit of a muted start in a sense, but GIFT Nifty futures indicating that we could see the market Nifty 50 go all the way up to 26,506. Remember, it closed on Friday at 26,202. And there's a lot for it to digest, really. This weekend has had a lot. The GDP data, which was strong in the hopes for a Fed rate cut, only becoming brighter. Now, that's positive, even if the hopes of some respite from the tariffs appear to have been pushed to the end of the year. Expect caution around FX trading, since the RBI's expected decision of a rate cut could weaken the rupee further. The rupee dropped 9 paise to settle at 89.45 against the US dollar on Friday, tracking also, amongst many other factors, a rise in international crude oil prices, according to Reuters. Now, the RBI increased its short dollar positions in the FX market by 4.2 billion in October. This is data that came in on Friday, underlining, once again, heightened efforts to counter pressure on the rupee. So we're watching that very closely, how the rupee really reacts. Now, India's economy grew at its fastest pace in 18 months in the July to September quarter, expanding 8.2%, well above market expectations of 7.3% and up from 7.8% in the previous quarter. The stronger than expected growth was driven by robust consumer spending, a rush in production ahead of the festive season, and businesses moving quickly to cushion the impact of US tariffs on Indian goods. Prime Minister Modi said on X that the growth reflects the government's pro-growth policies and reforms, and pledged continued economic measures. Recent steps include broad tax cuts and labor reforms aimed at boosting domestic demand and supporting the economy amid global uncertainty. However, that strong GDP data is now raising questions if the RBI will still need to cut rates when it meets this week. The wide expectation was that the central bank would cut by 25 basis points this week. Remember, the focus is also on the trade deal. India expects to secure that deal with the United States before year-end, New Delhi's Trade Secretary said on Friday, as most issues have reportedly been resolved. The comments come amid ongoing tariff tensions after Washington imposed duties on as high as 50% on Indian imports starting in August. Speaking at an industry event, India's Trade Secretary Rajesh Agrawal added that the remaining sticking points between the two sides can be addressed at a political level. Meanwhile, at the same event, India's Commerce Minister Piyush Goyal confirmed that New Delhi and Ottawa are resuming talks for a trade agreement this week. It follows a string of high-level visits from Canadian ministers, signaling a thaw in relations after ties hit a low point back in 2023. India exported over $9 billion worth of goods to Canada in 2024 and 2025, and bilateral trade in goods and services topped $18 billion in 2023. There's a lot to cover. Let's bring in our guest, Anubhuti Sahai. She's the head of India Economics Research at Standard Chartered Bank. Anubhuti, thank you so much for coming on. Appreciate it very much this Monday morning.
Hi, very good morning.
Yeah, thanks so much for that. Now, I just want to get started with what you make of the GDP data. Is it the kind of positive, this number of 8.2% reflecting when estimates were 7.3%? Is it the kind of positive that you expected, and what does it really mean?
The GDP print was definitely much higher than what everyone in the street expected. Our forecast was at 7.5, so it was a clear upside surprise. And if we look at the sources of surprise, it primarily came from manufacturing sector growth, which grew at 9%, plus 9%, and services sector growth, which clocked a second quarter of plus 9% growth. Now, there is a mix of statistical factor as well as actual drivers on the ground. If we look at our own composite indicator, so we have a composite activity indicator which comprises of 18 high-frequency indicators that showed that economic activity clearly picked up in the quarter ending September. And to that extent, we all were looking at a 7.5% number. But as we look at formal sector data, probably as more unorganized sector data was captured by the GDP number, probably this economic momentum was much more than what we all anticipated. There is a second role of deflator. This was the quarter when inflation dipped significantly, both for CPI as well as WPI, and that also played a significant role in boosting real GDP. That is very well captured because if you look at the nominal GDP, it just grew at 8.7%, pretty similar to what we saw in the Q1. So it's a mix of good news, but at the same time caution, because as inflation starts moving up from the March quarter, we will see real GDP moving lower.
Okay, there's a lot to cover in that answer, but let's get to the more urgent matter first, and I'll come back to some of the things that you've spoken about. Your view on the RBI cutting rate or not. My understanding is that you are thinking of a pause, because the question really is that how does the RBI cut rates if you have inflation at 0.3% and growth is as high as 8.2%? But remember, you seem to be the outlier. Most are expecting a rate cut.
So we have been maintaining this view that after front loading of rate cuts, so there have been 100 basis points of interest rate reductions by the MPC since the start of this financial year. Growth is at plus 8%. For any central banker to cut rates with an plus 8% growth is it's very difficult. What are you cutting for, especially when you have cut a lot in the past few quarters? The other part is what is more important. Our view is that at this juncture, if a rate cut of 25 basis points is delivered, probably it will become an inhibitor in terms of transmission. It's very typical market behavior, nothing very specific to India. But as we approach the end of easing cycle and when the last rate cut is delivered or market interprets it as the last rate cut, they start taking yields higher. Then if that is the case, then the point of delivering a rate cut of 25 basis points in December, in our view, will actually be counterproductive. Thus, our view is that they should keep rates on hold, indicate that there is still some space to ease rates, but at the same time focus a lot more on liquidity, which has dwindled significantly in terms of surplus size because of the intervention by RBI in the FX market. So more importance should be given, in our view, to liquidity injection rather than rate reduction.
Okay, that's very interesting. But we heard the RBI governor in an interview last week. He indicated that both the MPC and in his view, there is a chance of a rate cut. In fact, he kind of was inclined to suggest that, yeah, there is, we can actually go ahead with one. So I'm just trying to understand realistically, you are suggesting that you would like a pause, but do you see it happening that there will be a rate cut? Because not only are most economists suggesting that, but also the RBI governor.
So a very interesting point which you have raised, and I think from markets perspective, we always pick what we want to hear. The RBI governor's comment was there was space, to ease in October. MPC decided to wait and watch. We still see space to ease, and we will wait and see what the MPC decides. And I don't. I think we all have latched up to the first part of the comment, not the second part. Of course, MPC has justifications to cut rates, and if they decide, they can definitely cut rates, and we can be proven wrong. But the main question is, what is the utility of delivering a rate cut when it will not get passed on to the economy, and when there is a lot more urgent requirement to inject liquidity rather than cut rates? RBI has always emphasized that it's a forward-looking central bank, and inflation by the first quarter of fiscal year 27, that is June, will start moving closer to 4%. So our view is that the rates are likely to stay on hold, despite what we heard from the RBI governor, and especially after the GDP print of plus 8%.
Okay, there's a lot to cover once again, but let me just talk about what we showed our viewers a short while back about yet another announcement that effectively has pushed hopes around a resolution with regards to this tariff situation to now end of year. Earlier it was Thanksgiving. The Commerce Secretary speaking about that earlier. But this GDP data that's come in on Friday, it points to this particular question. Does this prove that the punitive US tariffs have a lower impact than perception on the markets on the impact of tariffs?
The September quarter GDP, in our view, would not have fully captured the impact of tariffs because the only month where we probably saw exports declining to the US economy was in the month of September. And let's also be reminded that there was a fair bit of front loading only for smartphones, not for other sectors, but there was a fair bit of front loading for smartphones exports from India to the US. So I don't think it gets fully captured. As we move into further quarters, that is Q3 as well as Q4, and if a trade deal doesn't come through, our sense is that we will see a larger impact of in case if the trade deal remains non-resolved between India and US. So Q2 numbers, in our view, have not fully captured the first order as well as the second order effects of the ongoing trade tension between India and US.
Yeah, I mean, we do know that it was August 27th when the tariffs came into play largely for India. So the month of September is really the only month that could have seen that effect play out. Let's just return to the nominal growth at 8.7 point that you were making earlier. That has been, it has a negative kind of impact on how we view this GDP data. And we're also seeing that it was down from, marginally from 8.8% from the previous quarter. But then you have this additional layer of doubt around this data. The International Monetary Fund on Wednesday retained its C grade for India's national account statistics, where the GDP data comes from, which means that the data provided to the fund have some shortcomings that somewhat hamper surveillance. Now, this has been known. It's been a part of a big debate in the economist circles. But at this point in time, when GDP goes from an estimated 7.3% to all the way to 8.2%, do you reconsider how you factor in this particular point of how the data is actually calculated?
So it's very difficult, because I think the most important, there are a few points. One, as I already highlighted in the beginning, it's not, was economic activity better in Q2? Absolutely, yes. And that is pretty well captured if we look at the high frequency indicators. But was it as good at 8.2%? No. There is a role of deflator. And in case of India, the problem lies that for a lot of subsectors, we use a single deflator rather than a double deflation approach. And that creates, challenges around forecasting GDP very accurately. Hopefully, when the government statistical organization from Feb of 2026, they are coming out with new GDP as well as new CPI base year, plus methodology is likely to be revamped, and the coverage will also get expanded. So hopefully this problem will get resolved to a great extent, though India doesn't have a services PPI, and that will keep this debate to some extent alive going forward. That challenge will remain, but I would expect a much better and probably this debate to slow down when the new GDP series from Feb of 2026 comes out.
I just want to get a sense if you could quantify this. You say it is better, but how much better? Because of the deflation factor, because of the data problems. Do you have a number that you can say it's not 8.2%, but how much is it?
Sure. So if we just look at the deflator, the starting point is that inflation was low, but was it as low as 0.5%? Absolutely not. So if we assume it was closer to 2%, one can say India was growing a bit closer to the 7% mark rather than an 8.2%. But again, as I highlighted, it depends on which angle you're looking, which angle you're trying to analyze the data from. It's a fact that inflation was low in India in the September quarter. And to that extent, with similar purchasing power, the consumers were able to buy higher number of goods or more units of goods. So I think that angle also needs to be taken into consideration along with the problems which we face in terms of a lack of a double deflation model.
Okay, let's just talk positives as we end this discussion. Manufacturing output rose 9.1%. You mentioned services also earlier. But I'm concerned with, could this data really halt foreign investor selling and even pull FIIs back into India?
No, absolutely not. I think there are much larger drivers at play. And the most important driver at this particular point would be how the global rates would pan out. I think it makes a lot of, the real rates in dollar terms are much more attractive outside India rather than India. Valuations have seen a time correction, but they are still considered rich. The other part is that will corporate earnings continue to perform going forward, especially if demand starts fading off after the impact of counter-cyclical measures like GST cuts, etc., start fading. So I think FPI flows are likely to remain cautious, and it would depend a lot on how the broader global environment plays out. One key thing would be to watch out in case if India gets included, it's still under consideration, but in case if India gets included in the global ags index, then maybe we can see some debt inflows. But on equity side, we are still very cautious. There are other bigger stories in play, which are likely to keep FPI flows in equity market on a cautious footing.
Okay, Anubhuti, we're completely out of time, but fantastic conversation there. Anubhuti Sahai from Standard Chartered Bank, thanks so much for giving us that perspective on the GDP data. All right, now India is expected to open talks with Russia this week on buying Su-57 fighter jets and the S-500 missile defense system, according to a Bloomberg report. The discussions would take place during President Vladimir Putin's visit to New Delhi as the two countries look to deepen their long-standing defense partnership. The Kremlin says Putin and Prime Minister Narendra Modi will review all aspects of their privileged strategic partnership. India has relied on Russian weapons for decades, though it's increasingly diversifying suppliers and boosting domestic production. Putin's trip from December 4th to 5th will include meetings with Modi and President Draupadi Murmu, with several agreements expected to be signed. All right, more news and updates on the other side of this break. Don't go anywhere. You are looking now at live pictures from Hong Kong. The city has declared a 3-day mourning period that started on Saturday for its deadliest fire in 75 years. Thousands gathered in Hong Kong on Sunday to pay their respects to the victims. Rescue operations concluded on Friday. 146 people have lost their lives in the blaze, while more than 40 remain unaccounted for. In light of heightening concerns over missed fire warnings and highly flammable scaffolding materials, authorities have arrested 11 people in connection with the disaster. Hong Kong's Buildings Department has also temporarily suspended works on 30 private projects. Beijing has commended Hong Kong's rescue efforts and pledged support, but warned it would crack down on any anti-China protest in the wake of the tragedy. Also, Sri Lanka is battling what President Anura Kumara Dissanayake calls the most difficult rescue operation in its history, as the death toll from Cyclone Ditwa climbs to 212, with more than 200 still missing. Nearly 1 million people have been affected by record floods and landslides, forcing close to 200,000 into shelters. India was a first responder, deploying relief and food support. Ditwa also brought heavy rains to the southern part of India, but now has weakened to a deep depression. In the meantime, Southeast Asia is also grappling with floods. Thailand, Malaysia and Indonesia have all been affected. CNBC's JP Ong is right here with us in the studio. JP, what's the status?
Yeah, well, one thing before we get into that, Amitosh, the week that was a forgettable week in terms of natural disasters, whether they be in South Asia, as in the case of Sri Lanka, or here in Southeast Asia. And really, a lot of these torrential rains and floods affecting many countries in this part of the region. So we'll start off with a cyclone, because we talked about a cyclone hitting Sri Lanka earlier on. Cyclone Senyar made its way down the Malacca Strait, which is a rare occurrence actually for cyclones, and probably brought torrential rains and floods to the parts of Western Sumatra, North Sumatra, Western Sumatra, and also the province of Aceh. And now the death toll there, unfortunately, Amatosh, has now climbed to about 442 people. Apart from trying to assess economic damage and also trying to make sure that people are safe, there's also the task now to find more than 400 people that are still missing from these devastating floods that has hit Indonesia's largest island. If you go across the Strait of Malacca, you'll see that Malaysia's northern province was also affected, with tens of thousands of people displaced and about 2 people dead. But that pales in comparison to the 170 people that have now lost their lives in Thailand, the southern province of Songkhla and other regions. Now, in Thailand, it's a bit more tempestuous and controversial because a number of people are criticizing the government for being late to responding to this. The government is now being accused of not alerting people in time to evacuate or providing evacuation protocols. And the Prime Minister, Anutichan Virakul, has now admitted that the government has fallen short of providing some of this the support to make sure that the loss of life was mitigated, and says the government can actually do better. Now, whether or not this is a bit of a wake-up call for this region is anyone's guess, actually, whether we'll see improvements in the future. But one thing's for certain, it's not the first time we've seen huge floods and rains hit this part of Southeast Asia. And again, the question is, how will governments actually respond? Because it's not just economic downturn we'll have to think about, it's also the loss of life and whether or not you can respond to increasingly intense periods of natural disasters is something that all of these countries, whether it be South or Southeast Asia, will have to respond to in the coming years.
And even if they respond, it's going to take time. This is not something that you can solve in a minute or so.
Yeah.
But there's also this other angle that we've been focusing on, which is the protests that are potentially happening or about to happen. And this is with regarding this flood control scam in the Philippines. What's that about?
So the thing is also, before these floods that happened over the last week, we've also seen numerous floods hitting the eastern part of Southeast Asia in the country of the Philippines because of what's been a very long typhoon season. And what these floods in July, actually, from some of the typhoons actually revealed, is that an investigation into the flood control projects that were supposed to mitigate the floods brought by these typhoons actually wasn't enacted. In fact, some of them were actually seen to be misappropriated, actually, and perhaps even pilfered by government officials and contractors, which has resulted in a huge outrage and also resulted in the second installment of what they call the Trillion Peso March over the weekend. Now, it's a little smaller than the first edition of it that was held in September, but again, demands are still there. The people are voicing their frustration, that is, with regards to the fact that so much of their taxpayer money that was meant to fund these flood control projects was pilfered. And they're now asking for accountability in terms of making sure this doesn't happen again, making sure also that those who were caught stealing were actually brought to justice, and also to make sure that the anti-political dynasty bills are actually passed. Now, the thing that complicates this also is that while the president, Ferdinand Marcos Jr., is trying to find out who is responsible, there are now allegations that the Speaker of the House, or the former Speaker of the House, who is his cousin, was implicated, and even his son, who was a member of Congress, was also implicated in some of these insertions and allegations. So again, it complicates things, but what it does now is add a lot of economic uncertainty for the Philippines, because this could actually drag on spending, which means it could drag on growth for one of the fastest growing economies in Southeast Asia. But of course, this also raises the question as to whether or not some of the lives lost during this typhoon season could have been saved, actually, if these flood control projects were only built. But the question now, of course, also is, are things actually going to change? Because we've seen this before in other parts of the world, Amitosh. Calls for accountability towards corruption actually don't seem to be heeded in certain countries. And again, that is the never-ending question, right? Are things actually going to change? Because we've seen sometimes it doesn't.
Yeah, and we can't even figure out right now what is the economic damage. Like, we can't put a number to that just yet. And perhaps anybody that does that will be questioned, because it's so difficult to estimate the economic damage of this kind of climate change activity. Well, thanks so much for that, JP Hong. Appreciate that. We're going to be taking a bit of a quick break, but on the other side, we will focus on the country's medium and small business ecosystem. We'll speak to Gaurav Sachdev of JSW One, a platform that sells manufacturing and construction materials to these smaller enterprises. More on the other side of Inside India. All right, welcome back to Inside India. We're looking at the oil prices. They're up strongly in Asia. OPEC Plus, remember, has agreed to keep oil output unchanged through the first quarter of 2026, signaling a shift towards stability as the group navigates fears of a growing supply glut. The producer group, accounting for half of global production, is slowing its push to reclaim market share, just as Washington renews efforts to broker a Russia-Ukraine peace deal that could eventually free up more Russian barrels. And OPEC Plus still has more than 3 billion barrels per day of cuts in place, and members reaffirmed those levels. The group also approved a long-awaited review of production capacity, a key step towards setting new output quotas from 2027, a contentious issue for members like the UAE, Iran, and Venezuela. At the OPEC meetings on Sunday, Venezuela accused the US of trying to seize its oil reserves by military force. In a letter sent by Maduro to the producer group, Venezuela, an OPEC member, said it would seriously affect the balance of the global energy market. Now, we are counting down to the market open in India. This is how we're shaping up at this point in time. We're looking at GIFT Nifty futures indicating that Nifty 50 could go up to almost 26,500. That would be a record, consistent with what's happening in the past few days, flirting with that number that we've hit above 26,350 or so, but going back towards 26,202. We'll be looking also at the rupee weakening, given the focus is really going to be on whether the RBI cuts rates on Friday when the decision is expected. At this point in time, it's a bit of a coin toss, some would say, simply because you've had these exceptional growth rate numbers, GDP Q2 growth rate numbers coming on Friday. They were indicating 8.2% growth in Q2, much higher than the estimated 7.3% by most economists. Now, India kicks off its winter session of Parliament today with 9 bills up for discussion. Key among them is the Securities Markets Code Bill 2025, which proposes to merge 3 separate capital markets laws into a single code to streamline compliance and boost ease of doing business. Also on the agenda, the Insurance Law Bill, proposing to raise foreign investment limits to 100%, and 2 bills targeting sin goods like tobacco and alcohol. The Modi government wants to shift these products from GST to excise duty, with the revenue earmarked for public health spending. Now, Amazon is coming for India's lending space. A Reuters report says the tech giant is preparing to offer loans to small businesses in India, expanding its push into financial services after acquiring local lender Axio. The unit will move beyond buy now, pay later personal loans and add small business credit and cash management tools. Walmart-owned Flipkart is also set to enter lending, awaiting approval for its Flipkart finance arm, which plans pay later and installment products for online shoppers starting next year. The move comes as India's consumer loan market has climbed to about 212 billion, and regulators have allowed tech giants to lend directly, opening the door for Amazon and Flipkart to challenge traditional banks. Now, JSW One, JSW Group's business-to-business e-commerce arm, says it expects to break even this fiscal year, and it pushes toward profitability. The platform, which sells manufacturing and construction materials to micro, small and medium enterprises, has a registered user base of more than 84,000 MSMEs across India. JSW One is also eyeing an IPO within the next 2 years, which could make it one of India's first conglomerate-led B2B e-commerce platforms to turn profitable. Gaurav Sachdev is Joint Managing Director and CEO of JSW One Platforms, and he joins us now. Thanks so much, Gaurav, for taking our questions as they'll be coming right now. Appreciate you coming on board.
Thanks, Amitoj, for having me here.
It's our pleasure. Now, I just want to start by asking you about the GDP numbers, because we've seen what could be termed a strong positive surprise, or once again reignite that debate on how the data is actually calculated. What's your take?
I think the GDP numbers are very strong. 8.2% growth on a real basis is really, shows the resilience of the economy. I think that the nominal growth, right, which is at 8.7%, could have been better. And if you drill down on the GDP growth numbers, right, you actually see that both the industrials, manufacturing, and within industrials, manufacturing and construction are really, keeping pace. Government spending, which was a bit of a drag, it contracted by about 2.7%, right? That's something that, that government is working on. We do see signs of that relaxing in Q3. So yeah, overall positive for us as a business.
Okay, can you give us a sense of what you're learning on the ground? Because there's been this debate around the data and what it really represents. We also know that manufacturing was one of the positives of this GDP data, ahead of 9%. But what are you learning on the ground as you are the registered user base of what? More than 84,000 MSMEs across India?
Yeah. I think so, before we get there, right, you'll have to just like understand that MSMEs are the backbone of this economy, right? All manufacturing that we do, it ends up translating into value chains where MSMEs are, either contributing directly or indirectly into this value chain. MSMEs today, form about 25%, expected to go to about 35% of overall GDP as it grows across. In our total manufacturing base, manufacturing forms about 17% of our GDP as a country, right? And that's also is expected to grow to about 25% in the next 4 years by FY30. Now, for on ground, we do had, if you look at H1, we did have shocks from tariff, we did have shocks from slow government spends, but what really happened was that there was redistribution of supply chain, right? So that's one thing that really, is on the ground. It's playing out, and the growth continues to be the way it is. For us, we were about 12,500 crores of GMV for a full year last year. We did about 8,000 crores in H1, and have strong momentum for H2.
Okay, I want to get to your profitability conversation, but can you just throw some more color on redistribution of supply chains, that comment?
So redistribution of supply chain is, evident. I mean, the export market in Indian MSMEs really export. Now with tariffs in the US, MSMEs are looking for exports into GCC. They're looking for exports into Europe. So that redistribution is the one that I spoke about.
And how much of that is happening? Can you quantify it?
There's no direct metric that we see, but from our user base, right, people or our customers who are dependent on exports, we don't see any major slowdown in their volumes.
Okay, now talk to us about the plan to break even this fiscal year as you push towards profitability. How's that coming along?
So our plan to break even is on track. Q4 is the first quarter where we expect us to break even as a company. It's all, if you look at where we have invested, we have really invested in a resilient supply chain where MSMEs can buy materials very reliably on our platform. Credit is an integral part of B2B ecosystem. And for enabling credit on our platform, we have like about 11 lenders. We give about 500 crores of loans monthly on JSW One. That helps the transmission of credit. It helps into transmission of that credit into purchase, and that purchase sits on a supply chain where we run last mile logistics for our customers. So, this is the stack of JSW One that's helping us scale up.
Okay, that's a lot of numbers you said. 11 lenders, 500 crore in loans. I think you said every month.
Every month, yeah.
Yeah, so just explain this to us. There's got to be risk associated with this kind of a trajectory, right? What is the credit risk associated with your own NBFC? Any risk related to the overall group? Because it's not clear to me what you're doing to really offset those risks as you head into a potential IPO and more visibility into your numbers.
So for us, risk on credit, right, is actually very diffused across the lenders who are lending on our platform. For lenders, JSW One becomes a gateway where they can access end customers, where their traditional lending does not reach directly, right? And also think of it as supply chain finance, right? It outruns every 60 days, every 90 days, and it has to be done every 90 days, renewed, right? So the technology stack, the tech stack of JSW One helps these lenders to lend over and over again, look at these customers, and look at the balance sheet of these customers, look at the risk that's coming out of the customers. The second part of our business is that JSW One, which is We sell materials from our partner distributors, third-party distributors, and JSW Group, right? They all form sellers on our platform. So typically, the credit quality of this ecosystem is very high because with the control that we have on sellers, we actually have significant share of, a buyer's, volume in steel products today. So that helps us to really look at data correctly, accurately, in case there is stress in the market, in case there is stress in segments that we lend to,
Right.
say, tubes and barrels, say, pipes and tubes, right? That gives us an overall span of what the market is doing and control that credit risk and give this information to lenders to price credit accurately, right? So that controls, that decreases the risk. JSW One
Okay.
finances the lenders on the platform, right? So it's not the sole lender, or I said 11 lenders give 500 crores monthly. JSW One is about like 10% of this business.
Understand. Can you give us an update on your plans to go for an IPO? And I know that a lot depends on the regulator, but what is your goal? And I need a date, a time, and all the way to the second.
We also need one, to be honest. So, our plans to go IPO, we intend to list within the next 18 to 24 months. I think given the state of the business, given the performance that we have had in H1, given the markets that they look like in Q3 of this financial year, we feel confident that we'll be able to file on time, get our approvals on time, and be ready by next year.
Okay. We got to talk about JSW Steel and generally the conversation around steel. How serious is the threat from low-cost steel imports, especially from China? There's this conversation around China dumping into India. How should India balance competitiveness with protection? There is also this latest information that India is considering extending an import tariff, locally known as safeguard duty on some steel products to counter cheaper imports, primarily from China. Now, this is according to sources. So, I don't know where JSW and you fit into this, but can you throw some light into this conversation?
Yeah. I think safeguard duty is essential for us as we grow as a country. We need to focus demand and supply locally as a business. And this is just not about pricing, right? It's about quality of material that finds its way into the country. All of this goes into building our silos, building say heat exchangers, building our LPG cylinders, and incorrect steel that comes into the country, which is not meeting, say, any technical specifications that manufacturers lay out, right? And it finds its way into hands of an MSME. I think it's just something that we need to stop as a country. Now, safeguard only attacks at the pricing aspect of it. It makes it the domestic mills at par with any import price that comes into the country. So, the MSME volume really shifts into high quality steel that we make in the country.
Okay. Appreciate that. Last question, and if we could get a brief answer. You also have that dedicated NBFC arm that works closely with banks and financial institutions for easing credit options at checkout. But now you have competitors potentially, Amazon and Walmart backed Flipkart. What's your view on that? They're also preparing to offer loans to small businesses.
Yeah, I think lending is a large market. It's not one person, winner take all business. The result that we have done in the commerce side of the business, where we own a large part of the MSME market in India, I don't think we'll replicate the same in NBFC. NBFC will be, every player will have its game. For us, we really control a massive supply chain. We intend to be a 50,000 crore GMV company over the next 3 years, a lakh crore over the next 6 years. And it gives us tremendous data, insane amount of data as a business to mine, to look at customers, to look at lend. And this is the ecosystem where we and our partner banks will continue to lend on. On Amazon and Walmart, I think there is enough space for each player to sort of play.
All right. But you have your advantages, right, because of the group. Appreciate that, Gaurav. Gaurav Sachdev from JSW One Platforms joining us right here on Inside India. Thanks so much. Okay, quick check on gold this morning. Spot prices rose to a 2-week high on Friday. Take a look out there. India's fiscal deficit this year has been widening due to the country's rising purchases of gold and slowing exports. In the meantime, a lot of Indians have also been buying silver this year. Prices of it, surged over 98% just this year. And in our latest CNBC Explains episode, we take a closer look at what's fueling the surge in silver prices.
Indian farmers, high-security London vaults and solar panels have almost nothing in common, except maybe for helping the price of silver reach record highs in 2025. On October 17th, silver traded at $54.47 per troy ounce, a 72% rise year-on-year.
Some people were having to transport silver by plane rather than on cargo ships.
Gold gave it a little bit of its own buoyancy. But more importantly, is that word again, tariffs.
In April 2025, US President Donald Trump announced a sweeping set of tariffs as part of his Liberation Day. While gold and platinum were exempt from the tariffs, silver wasn't on the critical minerals list at the time, creating uncertainty about what would happen if it were.
The risk managers in financial and industrial entities did not want to let any metal go out of the States for fear that it might come back in at 35% higher, for example. So they've been sitting on it, and that was starting to cause a little bit of tightness. And then India kicked in.
India is the world's largest consumer of silver. With about 4,000 metric tons used every year, silver is also seen as an affordable investment in a country where about 55% of the population depends on agriculture for their livelihood.
So we had a good monsoon and a good harvest. The farmers are coming back into the market with a fair amount of disposable income.
The monsoon harvest season also coincided with India's biggest public holiday, Diwali. The price of silver in India rose sharply, reaching a record high of 170,415 rupees a kilo. But 80% of India's silver supply is imported, and the UK is traditionally the country's largest supplier. In 2025, that became a challenge, as London vaults have emptied rapidly since 2022. In June that year, the London Bullion Market Association held about 31,000 metric tons of silver. By March 2025, the volume had fallen by around a third, its lowest point in years. Despite low supply, silver's unique industrial applications make it a metal of choice for renewables or AI.
It's got a higher thermal conductivity and a higher electrical conductivity than any other metal.
Some of the technology that's starting to come through, which hasn't really hit yet on silver battery technology, could see demand increase very, very rapidly. At the moment, a standard electric vehicle has about 25 grams of silver. If we move into these solid-state silver batteries, each electric vehicle might require a kilo or more of silver.
Famous for its volatility, the devil's metal might have some more shiny days ahead.
All right, Indian markets have joined the trading day. We'll look at some movers in Mumbai and take stock of Black Friday shopping. After this short break, it's looking positive. Welcome back. The Indian markets have come online. The Nifty 50 looking positive, flirting with its record highs once again, as it has done almost all of last week. You're looking at 26,286, up about 0.33%. The US dollar to the Indian rupee, that's the relationship we're watching out for before the RBI makes a decision on cutting its rate on Friday. At this point in time, the rupee weaker to the dollar by 0.09%. Intervention by, of course, the RBI has been in focus. And right now, the Indian market is still digesting what came on Friday. Through the weekend, it's digested that. That's the GDP data, which is very strong, surprisingly so, but a lot of questions around it. Now, India's major automakers, Tata Motors, Mahindra, Hyundai, and JSW MG Motor are reportedly pushing back against the proposed emission concession for small petrol cars, arguing it would mainly benefit only one company, Maruti Suzuki. The draft rules would tighten CO2 limits but give leniency to cars under 909 kg. 95% of cars in India are in that category, and they come from Maruti Suzuki. Rivals call this threshold arbitrary and harmful to India's EV goals, and they warn it could distort competition and stall investment. Maruti says a safeguard is needed as small cars already emit less and have limited room for efficiency gains. A quick check also on the Adani Group of stocks now. The group is planning to invest up to $5 billion in Google's new AI data center project, aiming to tap soaring demand for data capacity. Google announced a $15 billion 5-year investment in October to build its largest India data center campus in Andhra Pradesh, a facility requiring massive AI computing power. Adani's CFO, Jugeshindar Singh, said the project could translate into a multi-billion-dollar opportunity, adding that many other partners are also interested as India moves toward gigawatt-scale data centers. Singh also said the group is planning a $10 billion fundraise in fiscal year 2027. Meanwhile, travel over the weekend hit a snag after Airbus ordered an urgent update to its A320. CNBC's travel and transport reporter, Monica Petrelli, joins us right here in the CNBC studio in Singapore. What's the latest?
Well, the latest is that this partial recall from Airbus, which really is atypical for Airbus, this is being said to be the largest emergency recall in the company's history, some 6,000 of its A320 family of jets affected. What we're hearing is that it could have been a lot worse. In fact, most airlines now have fixed the situation, and fixing this situation really involves updating software in most cases. There are some hardware issues that are having to be dealt with, but for the most part, we're seeing airlines like Air India saying the situation now really under control. Indigo over the weekend saying didn't expect that this would be an issue after yesterday. So now we're just really seeing everything kind of getting back on track, and we're also seeing mostly Asia, Europe, and Latin America. Avianca is the one exception here that I would say said it's not taking any bookings until December 8th. But for the most part, things really getting back on track. And, nervous flyers won't want to hear about this. They don't want to hear things like software glitches about flying. But the airline industry would say, well, it's exactly these types of recalls that they put into place that keep the airline industry so safe.
All right. Avianca in Colombia, of course, right?
Yes.
Yeah, okay. Tell us a little bit about this, because over the weekend, I felt like a flood hit me wherever I walked in Singapore. All of it was to do with Black Friday. But I believe it's not just in the world of shopping, but also in the world of airlines that this had some, interesting conversations going around.
Absolutely. So airlines, hotels, rail, even Airbnb says it's experiencing, it's discounting its experiences all over. Yes, travel trying to get in and very much succeeding with the Black Friday sales. But the question is, some people saying, are these really real? Are they as good as they appear to be? And I do have a source telling me it doesn't really look to be the case. A lot of these discounts actually starting early in November, even sometimes marketing themselves as 1 to 2 day sales to get you to try to, click that book button. But it's looking like the discounts maybe not as good as they appear. And that's because it's really hard. It's hard to pinpoint how much does a flight originally cost, how much is a hotel originally, right? Unless you're really tracking it. But what I'm seeing from IntelliTravel, which is the source that I've been talking to about this, saying what really matters is the traveler feels that they got a good deal. So if you feel that you did, whether you did or did not.
Did you feel like it? Because I didn't feel like it.
I didn't book anything. I was too busy reading all the Black Friday emails to actually book anything.
I actually got something. I needed something, and I'm not sure I felt, that positivity. I was like, Black Friday, I thought it was going to be much bigger, but it didn't seem like that to me.
Air India there's a lot of T's and C's when I started looking into it, but Air India's Black Friday discount seeming to be pretty real. Air India is saying if you start from the US or Canada flight into India, so obviously trying to get inbound travel, it would discount the original fare by 20%.
Well, the competition in India is just bonkers. Thanks so much for that, Monica Petrelli. That's all the time we have today on Inside India. Obviously, I don't know why I need to say this again, but keep watching CNBC because you can access Middle East right up next.